There's been a lot of talk about an emerging housing bubble fuelled by low interest rates. Investment strategist Paul Schulte thinks that interest rates should be increased because, he says, Australian banks are lending too much money.
The interest rate structure seems awfully low, especially given something else which is really important, and that is that the overall level of aggregate debt is exceptionally high in Australia. It's one of the highest in the world in terms of the loan-to-deposit ratio for the banks being about 120%.
Essentially, he's saying that our banks have lent $120 for every $100 they have in deposits. That's the loan-to-deposit ratio. Last year, the Reserve Bank showed that Australia was ranked second only to the UK and just ahead of Sweden on that score. So Australian banks were lending much more than they held in deposits. But is that actually a problem? For Australian banks, lending for things like mortgages and commercial loans is a major part of their business. Overseas banks do more trading in shares and bonds, as well as investing in things like infrastructure, so the loan part of their business is smaller than it is here. Now, let's take a look at the deposit side of this ratio. Australia measures bank deposits more conservatively than some countries. We don't include sources of funding like interbank loans and 7-day bank bills. Other countries do. Australia only measures deposits in savings accounts and term deposits, so we may have less on the deposit side of the ratio. And Australia's position is improving. Local data released last month showed our ratio was $111 lent for every $100 deposited. That's down from $135 last year, and that's partly because we're putting more of our money in the bank. So while Paul Schulte's claim that Australia's loan-to-deposit ratio is high checks out, it doesn't take into account the stable nature of Australia's banking system and the fact that our loan-to-deposit ratio is getting better. The claim is overblown. That's a fact check. There's more on our website, and you can follow us on Facebook and Twitter.